welcome back to the deep dive. Remember how last week we were feeling a little overwhelmed by all the investing information out there?
Yeah, it can be a lot.
Well, you asked for investing tips that actually make sense.
Straightforward stuff.
So we're going straight to the source this time. Peter Lynch.
Great pick.
He ran the Fidelity Magellan Fund for 13 years.
One of the best.
Made his investors a lot of money, retired young.
Yeah, definitely not your typical Wall Street story.
But the best part is he shares all his secrets
Pretty generously.
in a way anyone can understand.
He's really about cutting through all that noise.
I like that.
His big thing is know what you own.
Know what you own.
Meaning you got to understand the businesses you invest in.
Oh, okay.
You understand your morning coffee routine.
Okay, that sounds way less intimidating than like all that Wall Street jargon.
Exactly.
How did he actually use that philosophy, though?
Well, he gives this great example. So imagine buying a stock.
Right.
And it's called a 1 megabit SRAM Clemos bipolar risk floating point data I/O array processor.
I think I'd need to Google that one.
Most of us would have no clue what that even is, right?
I'd probably just nod and pretend I knew what was going on.
Exactly. Lynch says that's how so many people invest
Oh, interesting.
in things they just don't get.
Makes sense.
He made a fortune on companies like Dunkin' Donuts
Dunkin' Donuts.
and Stop and Shop.
Oh, okay. Well,
Why?
I don't know why.
Simple businesses he understood.
So it's about looking beyond the fancy names
Ah.
and focusing on companies you can actually wrap your head around.
Absolutely.
Like those hidden gems in plain sight.
Now you're getting it.
But
Right.
let's be honest. We've all made investing mistakes.
Oh, yeah, definitely.
What are some common pitfalls Lynch says to avoid?
He debunks a lot of investing myths.
Okay.
We've probably all fallen for at some point.
Like what?
One big one.
Mhm.
It's gone down this much, it can't go any lower.
Oh, I've definitely thought that.
She learned this the hard way. Oh, no.
With Kaiser Industries.
What happened?
Stock was dropping, and he thought it was a bargain.
Ooh, that's tempting. Thinking you're getting a steal.
It's easy to think that
What happened?
the stock kept falling.
Oh, no.
You realize that
Yeah.
even when a price seems low,
Mm-hmm.
you have to understand WHY it's dropping.
Right.
In Kaiser's case,
Yeah.
deeper problems with the business.
So a falling price doesn't automatically mean it's a good deal.
Yep.
You have to do your homework.
Do your research.
See if the company is actually healthy.
Exactly.
Another dangerous thought.
Ooh, tell me.
Eventually, they always come back.
Oh, that's a classic.
That's not always true, is it?
Sadly, no.
Oh, okay.
Lynch points to companies like RCA,
RCA, big
name, and Western Union.
Oh, wow, yeah.
Big names
Yeah.
that never recovered.
So even big established companies,
Yeah,
they can disappear.
it happens.
That's a bit unsettling.
It really highlights the importance of understanding a company's long-term potential.
Not just relying on past glory.
Right.
And here's one we've probably all thought.
Okay.
It's $3. How much can I lose?
Oh, yeah, I've definitely thought that.
Lynch says the price you pay
Oh, right.
still matters, even if it seems cheap.
Explain that a little more.
Imagine you buy a ton of stock at $3 a share,
Okay.
spending way more than someone who bought fewer shares at $50.
Okay.
If the stock goes to zero,
Yeah.
you lose more,
Oh, I get it.
even though your per share price was lower.
So the total amount invested is important,
Absolutely.
not just the price per share.
You got it.
This is great stuff.
Heh.
What are some of Lynch's top tips
To actually make some money.
to actually make money?
He's big on patience.
Hmm.
Okay? Famous quote.
Oh, I love his quotes.
You have plenty of time.
You have plenty of time.
He uses Walmart as an example.
Walmart. Okay.
If you bought Walmart stock 10 years
10 years after.
after its IPO,
Okay.
when it was already well known, you still could have made a 30-fold return.
Wow, that's incredible.
It is.
I guess good things come to those who wait,
Especially in investing.
especially in investing.
He also stresses knowing the story of a company.
The story.
This doesn't mean a made-up tale or anything,
Okay.
but rather, what are the factors
Yeah.
driving the business?
Okay.
He saw Chrysler minivans everywhere
Chrysler minivan.
and realized people loved them.
They were popular.
This led him to invest in Chrysler.
Oh, interesting.
And it paid off.
So it's about connecting real-world observations
Mm-hmm.
to company performance.
Absolutely.
That makes investing seem much less abstract.
It is. It's all around us.
More like something we do every day.
Exactly. Don't try to time the market
Okay.
or predict the economy.
Oh, man, I try to do that all the time.
Lynch says even experts can't get that consistently right.
Well, that makes me feel better.
Instead,
Yeah.
focus on finding good companies at good prices.
Okay.
regardless of
what the market's doing in the short term.
So, no need to become an economics guru.
Not at all.
Just find solid companies and stick with them.
Exactly.
He even says to be brave and buy during market declines.
He does. He does.
Really?
Think of it like a sale.
Like a sale.
When everyone else is panicking,
Okay.
you can snag great companies at a discount.
That's counterintuitive,
It is.
but it makes sense.
It does.
So Lynch is saying that even crashes can be opportunities
Oh, yeah.
if you have the guts to buy when others are selling.
That's the idea.
One of his most famous quotes.
Yeah, which one?
If you put $1,000 in a stock, all you can lose is $1,000. But if you're right, you can make $5,000, $10,000, $20,000.
Love that one.
It highlights the potential upside of investing when others are freaking out.
Exactly.
That's a great way to reframe how we think about market downturns.
It is.
I think we all need a little more of that Peter Lynch courage.
Couldn't hurt. He also talks about letting your winners run. Letting your winners run.
Yeah, like it's tempting to sell when a stock has gone up a lot.
Oh, yeah, for sure.
But Lynch held on to Subaru for years.
Subaru, okay.
Even as it quadrupled in price.
Wow, so resist that urge to cash out too soon.
Exactly. Patience, patience.
When do you know it's time to sell then?
Lynch says sell when the story changes.
When the story changes.
Meaning the reasons you invest in the first place,
Okay.
they no longer apply.
Okay, so the company's not doing as well anymore.
Right. Maybe the company's growth is slowing down, or a competitor's like eating their lunch.
Okay, so always go back to the fundamentals.
Yeah.
The why behind the investment.
Go why? Absolutely.
That makes sense, but Lynch also talks about different categories of companies,
He
right?
does. He breaks companies down into groups.
Okay.
Like slow growers, stalwarts, fast growers, you know.
And that helps investors how?
It helps you understand how different types of businesses
Yeah.
behave
Okay.
and apply the right analysis to each one.
Can you give me an example?
Sure.
What's a stalwart company?
Think of big, reliable companies like Coca-Cola or Procter & Gamble.
Okay, familiar names?
They might not grow super fast,
Right.
but they're solid
Reliable.
and often pay consistent dividends.
Makes sense. So you wouldn't expect those companies to suddenly double in size overnight.
Probably not.
But they're steady, dependable.
Exactly.
What about analyzing all those financial numbers? That part always scares me a bit.
I hear you. Lynch doesn't want you to get bogged down in overly complicated stuff either.
Okay, good.
He explains key things like
Yeah.
the PEG ratio, debt levels, cash flow,
In simple ways.
as simple as possible.
Okay, we talked about the PEG ratio earlier.
Yeah.
Remind me why that's important.
It helps you see if a company's growth
Mm-hmm.
justifies its stock price.
Okay.
Imagine it's like
Yeah.
checking if the engine of a fast car
Uh-huh.
is as powerful as its price tag suggests.
Oh.
You don't want to pay a premium for a car
Right.
that can't deliver.
That's a great analogy.
Thanks.
So the PEG ratio helps us see if a company is all show and no-go.
You got it.
What about those other things?
Yeah.
Debt and cash flow.
Debt levels tell you how much debt a company has
Compared to
compared to its equity.
equity. Okay.
Kind of like checking if someone's taking on too much debt for their income.
Makes sense.
Cash flow shows how much money a company is actually generating.
Okay.
Like seeing if a business has enough cash coming in
To pay its expenses.
to cover its expenses. Yeah.
So it's about making sure a company isn't drowning in debt
Right.
and that it's actually making money,
Yeah.
not just looking good on paper.
Exactly.
But can't companies manipulate those numbers?
That's a great point. Lynch says, financial statements aren't always perfect.
Okay.
He encourages investors to do some detective work.
Detective work. I like that.
Read industry reports, talk to customers, even visit stores or factories if you can.
Really get in there.
Get your hands dirty.
So be a bit skeptical.
A healthy amount of skepticism is good.
Don't just take those numbers at face value. I
Exactly.
like that.
Good.
What are some other things Lynch suggests we look for?
He says insider buying is a good sign.
Insider buying. What's that?
That's when people who work for the company
Oh,
are
right.
buying its stock.
Oh, so they must believe in the company
You would think so,
if
right?
they're putting their own money in.
It's like the chef eating at their own restaurant.
Exactly.
What else?
What else?
Don't be afraid to look beyond the obvious.
Oh, okay.
Lynch made a successful investment in Service Corps International.
What's that?
They own funeral homes.
Funeral homes.
Yep.
That's not exactly what people usually think of as a hot investment.
You're telling me?
Not the most glamorous industry.
But Lynch says there are good businesses everywhere,
Okay.
even in industries people don't usually think about.
So it's about challenging those assumptions
Absolutely.
about which industries are sexy or boring.
Yeah, get rid of those labels.
There could be hidden gems anywhere,
Anywhere.
if you know where to look.
That's right.
And remember, investing is a marathon, not a sprint.
That's the key takeaway.
Lynch stresses tuning out the market noise,
All that chatter.
focusing on the
The
fundamentals.
fundamentals, yeah.
Don't obsess over daily stock prices or every bit of news.
That's gonna stress you out.
So avoid getting caught up in the short-term hype
Mm-hmm.
and focus on the long-term potential.
Of the companies you invest in, exactly.
Right.
He believes too many investors get spooked by short-term volatility,
Oh, yeah.
and they miss out on long-term gains.
All this talk about long-term investing makes me think about something else. Lynch says,
Oh, yeah. What's that?
the key organ for investing is the stomach, not the brain.
That's a good one.
What does he mean by that?
He's saying that investing is about managing your emotions as much as,
Yeah.
crunching numbers.
So it's not just about being good at math.
Not just math, no.
You have to be able to ride out the ups and downs
It's a roller coaster.
and not panic when things get bumpy.
Yeah, stay calm.
I can definitely relate to that.
We all can.
It's easy to get emotional
It is.
when you see your investment fluctuating.
Oh, for sure.
But it sounds like Lynch is saying
Yeah.
to stay calm and trust in the process.
Trust the process long term.
And don't fall into the trap
Right.
of trying to time the market.
Yes, the elusive timing the market.
Predicting when to buy and sell to maximize profits,
The holy grail.
that's always tempting.
It is.
But it sounds like Lynch is saying it's nearly impossible to do consistently.
He is. He says even the pros
Even the pros.
are terrible at it.
Oh, wow.
Instead of trying to outsmart the market,
Okay.
he says focus on finding great companies and holding on to them.
So focus on the long game,
The long game.
not on trying to win every single trade.
Exactly.
This is all making a lot more sense now.
Glad to hear it.
But what if I make mistakes? Lynch was super successful,
He was.
but he must have made some bad calls along the way.
He did.
He definitely wasn't perfect.
Nobody is.
He's actually really open about the mistakes he made
Yeah, he owns them.
and what he learned from them.
That's important.
I think that's what makes him so relatable.
It makes him human.
It shows that even the greats mess up sometimes.
It happens.
The important thing is to learn from those mistakes.
Learn and keep getting better.
Exactly. And it reminds us that investing is a journey.
A journey. Yeah.
There's always more to learn.
always.
It's okay to make mistakes along the way.
That's how we learn.
I'm really starting to see how Lynch's approach
Yeah,
is about more than just numbers.
it is. It's bigger than that.
It's a whole mindset, right?
Absolutely. He wants you to be curious, to observe, to think independently.
Not just follow the crowd.
Don't just follow the herd. Exactly.
Do your own research.
Yeah,
Form your own opinions.
that's key.
That makes me think of another one of his quotes.
Oh, which one?
The person who turns over the most rocks wins the game.
Rocks.
And that's always been my philosophy.
That's a good one.
He's talking about actively looking for those hidden gems,
Not waiting around.
not just waiting for them to fall into your lap.
You gotta put in the work.
Exactly. He even suggests writing down your observations
Oh, interesting.
and questions.
Like in a journal or something?
Maybe you notice a new store
Okay.
is always packed,
Yeah, that's a good sign.
or a product your kids love is flying off the shelves.
Keeping an eye out.
Those could be starting points for investment ideas.
I like that.
So instead of just passively consuming information,
Mm.
he wants us to engage with the world around us.
Yeah, be present.
See those potential opportunities.
They're everywhere.
It's about turning our everyday experiences
Our everyday life.
into an investor's edge.
I like that. Investor's edge.
And remember, Lynch managed billions of dollars for other people.
That's a lot of responsibility.
He wasn't just playing with his own money.
He had people counting on him.
He felt a responsibility to make wise choices.
It's a different game when it's not just your own money on the line.
That adds a whole other layer to it.
It does.
It's not just about making a quick buck.
Yep.
It's about making responsible, informed decisions
Long-term thinking.
that will help people grow their wealth over the long term.
Absolutely.
He often talks about how stressful it was
Yeah, I bet.
to manage that much money.
Can't imagine.
But he clearly cared about doing right by his investors.
It sounds like it.
It sounds like he had a real passion for investing.
Yeah, more than just the money.
Not just for the money,
Right.
but for the intellectual challenge
We love the game.
and the opportunity to help others.
That's a good point.
His story really is inspiring.
It is.
It shows that anyone
Yeah.
with the right mindset and approach
And a little bit of luck.
can become a successful investor.
You don't have to be a Wall Street insider.
You don't need a fancy degree or insider connections.
It's about being curious, patient,
disciplined,
and willing to learn from your mistakes.
and most importantly,
What's that?
don't forget to have fun along the way.
You gotta enjoy the ride.
I think we've given our listeners a lot to think about today,
We covered a lot of ground.
and hopefully some practical tools to use.
Definitely.
We have. Remember, this is just a glimpse into Peter Lynch's wisdom.
Just scratching the surface.
There's so much more to discover in his books and interviews.
Yeah, he's written a lot.
We'll be sure to include links to those in the show notes.
Good idea.
But before we go,
Almost there.
what's one concrete thing our listener can do today
To put all this into practice.
to start applying Lynch's ideas?
I think the best place to start is by simply observing
Observing. Okay.
the businesses you interact with every day.
So like when I'm out and about,
Yeah, just notice things.
which ones are thriving?
Which ones are packed with customers?
Which ones are struggling?
Where are people avoiding
What's the story
the story? Yeah.
behind their success or failure?
It's all about the story.
Great advice.
Thanks.
Start paying attention to those everyday details.
Those little things.
You never know where your next big investment idea might come from.
You really don't.
Maybe it's that busy coffee shop down the street,
Could be.
or that new gadget everyone's raving about.
Always good to keep your eyes open.
And most importantly,
Most importantly,
don't be afraid to dive in and start learning.
just get started.
The world of investing can seem intimidating,
It can be a lot.
but as Peter Lynch shows us,
Yeah, he's a great example.
it's something anyone can master with the right approach.
Anyone can do it.
Well said. I think we've officially equipped our listener
They're ready to go.
to start seeing the world through an investor's eyes.
They got this.
Until next time, happy investing.